You are listening to the Good Food CFO podcast. I'm your host, Sarah Delavan, and with us, as always, is our producer, Chelsea Deer. Hey, Chelsea.
Hey, Sarah, I am super excited for this episode. This is going to be the last episode of the season. As we say, Merry Christmas, Happy Holidays, and move into the new year. And we are closing out the season with a really juicy convo between you and angel investor Katie Dunn.
Chelsea, I think one of the most commonly asked questions, one of the most frequently requested types of content is around investment and funding. And to be quite frank, I do work with some clients who seek investment from time to time, different types, but I'm not an expert in the field of investing. I am not the person who should be speaking solely on the topics. It was really important to us to bring in actual investors, people who can speak firsthand about what an angel investor is in this case. How do they work with brands? And just all of the questions that our audience has for an angel investor. And in fact, we took to social media in our stories and asked our audience what questions they had for Katie. And we asked all of those questions in this episode. So I'm really excited for folks to hear answers to their questions. I'm also really excited that Katie's here because I had the opportunity to meet with Katie one-on-one after I heard a conversation that she had with Nomke Petrola, I believe is her last name. I'm sorry if I'm pronouncing that wrong, Nomke. But Nomke was my coach in creating the software and really guiding me through the process of developing it, and has created access for so many women in tech, connecting us to creatives, to lawyers, to investors, et cetera. And Katie sits at the intersection of CPG and finance and tech.
Mm.
And when I heard that they were speaking and doing a talk, I was like, I have to be there. And also I have to meet Katie. And we talk about that a little bit in the episode, but I think that she's just such a honest, straight talking, open and giving investor that she was the perfect fit for our podcast. And as I said a moment ago, I'm just really excited for folks to hear our conversation and for many of you to get your questions answered by Katie.
Yeah. But before we get to that, Sarah, I do have one more member highlight before the break. This is our new member, Stephanie Welter Cross of Swelter Coffee Roasters. Delicious coffee by women for everyone. Swelter Coffee is on a mission to share delicious, high quality coffees by women producers to promote gender equity and sustainability. They work directly with smallholder farms that are run by women, roast to highlight their coffee's unique flavors, and ship directly to any door in the US and Canada. They are women owned, based outside of Chicago, Illinois. And if you want to learn more about Swelter Coffee, you can go to their website at sweltercoffee.com.
Amazing. Thank you, Stephanie. This was really fun to learn about Stephanie's brand. We have so many unique coffee companies in our membership, and I love that they are able to connect and support one another, as well as the rest of our community. So, Stephanie, welcome to the membership, and thank you so much for your support.
Okay, Sarah. Now I want to get back to the guest today, Katie Dunn. And why don't you tell us a little bit more about her?
Yeah, so you'll hear more details inside the episode, of course, but Katie became an angel investor after financing 10 plus billion dollars in commercial real estate during her 25 plus year banking career. And she now, as I mentioned before, helps fund and support founders full time. To date, she has made nearly 30 investments and focuses on underrepresented founders in CPG and tech. Katie works directly with early stage founders, taking them from overwhelmed and uncertain about fundraising to confident and well prepared through her company, Masthead Strategies. By helping founders perfect their pitches and their decks, create investor outreach strategies, prepare for Q&A, organize data rooms, and so much more, Katie really ensures that founders have the tools, the clarity, and the support that they need to grow. She's helped founders raise millions of dollars and to develop long-term strategic relationships that position them for sustained success. As I mentioned, in the opening, part of this episode, Chelsea, Katie is like straight talking, like she is just really honest and open. And one of the things that I learned from Katie early on in the conversation she had with Nomke that I got to sit in on was investor thesis. I had
Mm-mm,
never heard about this before.
mm-mm.
And I was so glad that she shared it. And we talk about what is a thesis, why is it so important, and why is it really critical for a founder to know, right, to identify the thesis of any investor that they're, thinking about reaching out to, because it's A, can save you a lot of time, and B, can help you find the right investor for your business. So I love that Katie shares more insights into thesis and why it's so important in this episode.
Yeah, I think that that is such an interesting kind of idea for founders to keep in mind, right, when they're looking. And you guys also talk about what makes a brand investable.
Yeah. So when I had my one-on-one conversation with Katie, one of the big questions I had was, will investors invest in local and regional brands?
Mm,
And she answered me very honestly, and I'm not going to spoil that answer here, but we dive into it in this episode as well. I think what I will share here is that investors invest to make money. That is their goal, right? They are taking a risk. The odds of making money on an investment are very small, but the way that they make money most of the time is during a sale or an acquisition, right? So,
mhm.
what does investment opportunity look like for founders and brands who don't want to grow to national, who don't want to have, a sale, who aren't looking to be acquired, but are rather looking to have an impact in their community or in their region? So, really excited for founders to hear her answer to that question that feels really, really big and important to me.
Yeah, and I think even beyond like what makes a brand investable, you guys also dug into like why it is so important that a founder make it easy to say yes.
Yeah. Think about, if you think back to the conversation we had around co-manufacturing, right?
Mhm.
And the number of CPG brands that are reaching out to co-mans every single day, right? Compared to the number who actually get like a response and who actually find a partner. Those numbers can be translated to investors as
Mm,
well, right? Thinking about how, you are an established investor, you've got a website, you've got a thesis, people know you're an angel investor, for example, in this case, and the number of cold DMs, the number of emails that get sent to these folks every single day. How do you get noticed? And how do you make it easy for someone to say yes to meeting you, to say yes to learning more about your business, to say yes about helping you, right? Because she
yeah.
also talks a lot about the importance of, reaching out and developing relationships with people before you are seeking investment, before you need anything financial from them, so that you can start to understand who they are, they can start to learn about your brand, et cetera, et cetera. So really critical to understand what makes it an easy yes for an investor, for example, to say yes to you and support you in the ways that you need it, and how you can go about creating that easy yes.
Yeah. That's so exciting. Well, I think we've teased this episode enough. There's so much good stuff to get into. So, what do you say we take a break and then we'll jump right in?
Let's do it.
Over 70% of early stage food brands fail due to cash flow issues, incorrect pricing, and thin margins. The Good Food CFO breaks through that noise. Partnering with founders from pre-revenue through their first million in sales, we have created a first-of-its-kind financial software that is designed to teach you to understand your numbers, price for profit, and make confident financial decisions that support long-term sustainability. The Good Food CFO's proven framework is helping good food businesses thrive. Your business is next. Head to thegoodfoodcfo.com to purchase now. Now, back to the show.
Katie, welcome to the podcast.
Thank you so much, Sarah. I am so excited to be here.
I'm excited to be chatting with you today. You and I were able to connect a couple of weeks ago, I think now, and I was just like, oh, Katie, I would love to have you on the show. There's so much interest and like desire for knowledge around investment that having an angel investor like yourself here on the podcast to answer listener questions, I think is just going to be so tremendously helpful to our CPG founders who listen. To kick things off, I want to talk about your thesis. So, in other words, for those who don't know what a thesis is, like who you invest in and how, like what led you to the thesis. So I'm going to let you sort of state that and share that with our listeners, and then just give us a little bit of background.
Sure. First of all, thank you for bringing up the thesis first and foremost, because it is so important that any founder knows that good investors have a thesis that they follow. And if you don't meet it, it's such a waste of time to talk to them because,
Yeah,
and I know a lot of founders think, oh, if they just meet me, I can convince them. It doesn't really happen. So it's good to understand what their thesis is and tell them why you meet it. So to answer your question, my thesis is to invest in underrepresented founders, and to me that is women, people of color, LGBTQ plus, uh, in based in the U.S. with the company and them based in the U.S. in consumer packaged goods and tech. And the tech is sort of mostly B2B SaaS tech light. It's not like if somebody comes to me and says, I have an AI business, I say, no, thank you. It's got every company should be using AI, including CPG companies. So it's not, I don't want an AI first business. I want a true problem being solved business. That's
yeah,
what I look for. And then the US part is mainly because I have invested outside of the US in the past, and I have seen firsthand how hard it is to help those founders when you're so far away.
mm,
It's, I do my best and I try, but it's just not as easy. So, and I like to be a hands-on investor and be on the check and really help the founder directly. So
yeah,
I can do that better if they're based here, which is where the majority of my network is.
yeah. Well, I, in return, want to thank you for talking about your thesis and the existence of a thesis in a talk that I saw you give with Noam Key, who's the founder of Theana. I wasn't aware that thesi existed. And I just thought like how great of you to lead with that in that conversation because it was really eye-opening for me and provided so much clarity, right? Like when you're speaking to someone and you know this is what I'm interested in, this is my wheelhouse, this is my knowledge base, whatever it is, I think there's just so much value in that. So just wanted to return the thanks and educating me on the existence of a thesis and also the importance of it.
Yeah, I mean, you just hit the nail on the head. It's like it's about leveraging the network I have, the resources I have. And if I like that's you're going to want that. You
Yeah,
want investors that have networks in what you're building or experience in what you're building so they can be helpful to you. Like I'm not going to be helpful to somebody in healthcare because I don't know anything about healthcare. Like I'm
right.
just not I don't even know where to start with that.
Yeah,
So
yeah,
it's very it's very intentional. And most people are. And then you continue to build every company that you add another layer of something of learnings that you can add to the rest of your portfolio. So
yeah,
it is helpful. And most VCs have that too. That's why VCs invest in certain stages because they know how to help founders at that stage or in certain industries. So it's not just anyone with investor in their in their LinkedIn profile. That's not the doesn't mean that they should be you should be talking to them. You should research them first.
Yeah, I think that's so smart. What led you to this thesis? Like,
Oh yeah.
did you work in tech? Did you work in CPG? Did you just have an interest in it?
So no, I didn't work in either. I worked in commercial real estate actually. But what I did do in commercial real estate was I did underwrote loans for buildings across the US. And so as a part of that, I would have to look at the tenants in the building. So whether it was a retailer in a shopping center or the tenants in an office building or the tenants in an industrial building, they're all different kinds of businesses. And I would have to look at the major tenants in those buildings and look at their financials, look at their
Mm,
viability, and make sure that they were making money so they could pay their rent so that the building owner would pay the mortgage, which is where I came in.
gotcha.
So with that, I learned so much about other businesses and how to look at a public company versus a private company, looking at how a retail operates differently than a manufacturer, which is different than a traditional office, law firm, for example.
Yeah.
And so I felt like I know how to do due diligence. I know how to look at financial statements and to read them and to understand and glean the right metrics out of them. And I went kind of with what I liked when I developed my thesis. So
Okay.
the first thing I invested seriously in was a spirits company, and I just love the beverage space. I like I always have something to drink next to me. It's not a cocktail, I promise. It's electrolytes. I just really enjoyed that business and learning about that business a lot. So I went deep into beverage. And then the tech side, personally, I love anything that makes you more efficient. Like I
Mhm.
love the seeing how a bunch of paper can be turned into a very quick process using AI or machine learning, whatever. So these people building these businesses that I could see outdated processes being streamlined. I love that kind of stuff. So I
Yeah.
basically leaned into what I liked is really what the answer is. But I took an angel investing class after I'd made a couple investments, and we really worked on the thesis there, and that was sort of the where I refined exactly what it was. And then a couple years later I added the US only.
Interesting. Can we talk a little bit about angel investor classes? Because I'm
Yeah.
one of the things I want to do with you today is ask a couple questions that are like true or false. And sort of in that list of questions was like, what is an angel investor, right? Like how do you become an angel investor? So the idea that there are classes is super interesting to me. What are you learning about? What are you discussing in angel investor classes?
Yeah, so it was put on by who's now become a very good friend and colleague, and we do a lot of deals together. We do a lot of different things together. This woman, Kate Brodock, who runs a company called Switch. So she has what she calls the Angel Sessions, and I was in the first cohort in 2020, and it was it started with, developing your thesis, how to read financial statements, the legal side of it. So there was basically eight classes, and she had experts come in, lawyers that work with startups and angel
Mm,
investors, other VCs, all these different things. And I can give you the link after so you can put this in there. But I've recommended it to so many people. It's such a great class and just level setting. I was very comfortable with the financial side and the due diligence side, but I just wanted to make sure I was understood the metrics, like understood
mm,
the the basics of a safe note, which is a simple agreement for future equity, which is what most early stage companies raise on. That's the instrument. Just the things that just to make sure I knew and had a good basis. So
yeah.
that's one. I actually put together a little angel investment guide. It's pretty basic, but it's on my website. It's free. And I did it just to give people a basis of what what the process is, what it means, what you should be looking at. And then I put the switch class in there. There's also angel groups that you can join, and those
Mm,
people will teach you by doing. So you join
mm,
the groups and they source deals. There's usually the way those work is there'll be a group that sources deals and then reviews the deals and decides what is good enough to be presented to the rest of the group. And then the founder would come in and pitch, and then the group decides, each individual decides, do I want to contribute to this? And if they get
mm.
enough money to make the minimum check size, they'll form an LLC and invest in that company. So that's a really good way to learn too, because it's sort of that group
Yeah,
mentality, and you can't really screw up too bad because there's other people backing you up.
yeah, yeah. But so one of the sort of like true false questions that I wanted to ask you, so I'm going to ask it now, is like, can anyone be an angel investor? Is it just something you can decide to do one day and write a check?
Yes, but
Yeah, yeah.
so hopefully your audience is familiar with the accredited investor
We're
concept.
going to assume they're not.
Okay. Okay. So an accredited investor is a definition that has by the Securities and Exchange Commission, the SEC, that they have come up with to decide who is knowledgeable enough to make these risky investments. So angel investing is extremely risky. Like there's the chances of something becoming a unicorn are like weensy, right? So
Yeah,
tiny. So you have to know the SEC wants to make sure you are educated enough and or wealthy enough to lose the money and not go back and sue and say I didn't know.
right,
So it's a self-attestation, meaning you have to most uh when you invest in a company and you're saying I'm an accredited investor, you are saying nobody else has to prove it for you. You have to
right.
say this is true. And there's a couple different things. It's income based. So if you make over as an individual, you have to make over $200,000 a year. As a couple, over $300,000 a year, and have investments worth of over $1 million, not including your house. So
Mm,
your primary
right,
residence. Or you can be a financial like you can have your Series 7 and 63 or 63. There's a couple licenses that you can have that would then qualify you as an accredited investor. That means you can basically invest in anything. You can write checks for however much you want to whoever.
right.
If you are not an accredited investor, you can still be an angel investor. And the ways you can do that, there's a limit. I think it's up to $5,000 a year, or you can also invest on things like WeFunder or Start Engine or Republic, those crowdfunding platforms that are actual real investments
Right.
versus like the Kickstarter or Indiegogo, which is you're basically giving the founder money and they might give you a product or money off of the product when it actually is produced.
Yeah.
Which by the way, hate those platforms. I hate them for founders and I hate them for investors because they're not real investments. You're not
Yeah.
really investing in the upside of the company. But so yes, you can. Anyone can be an angel investor. That's the the true part.
I love that. Okay, I'm gonna go down the path of the true or false question since we
Okay.
kind of kicked it off there, and then we'll sort of circle back. True or false? It is faster slash like easier to get funding from an angel investor versus VC.
That's an it depends
Okay.
because it's usually so angels are usually earlier than VCs, but the issue with angels is usually they're individuals. So
Right.
you're dealing with one person who might be busy or might have things going on, or whatever, doesn't want to write the check this week, whatever it might be.
Yeah.
It's not always faster and easier. It might take longer, it might take more convincing. It just depends. They might have not have as rigorous a process or formal of a process as a VC does. So,
Hmm.
but they do invest generally earlier. And when you go out to raise from VCs, if you can show I have X number of angels and they're good angels that are helpful and all that, it builds your credibility a lot
Mm.
with VCs, knowing that other people have backed you. You've seen uh, you've seen some traction in fundraising. I like to tell people the first step should be your friends and family. It should be the people that know you the best. And if they're willing to back you, that helps you get angels, and then angels will help you get VCs.
That's helpful. I love that. That's great. I have a feeling that a lot of these are going to be it depends. I just have two more for you. And I love it depends because that's often the answer that I give whenever I'm answering a finance question. Um, True or false, angels are less involved in the business than VCs. I kind of know the answer to this one, I
Okay,
feel
that one I say false
like.
for
Okay.
sure. And that's my personal experience, but it's I think people find that they'll certain people will really gravitate towards the business
Mm,
and want to be more involved than others. Like as an angel, I want my companies to lean on me. Not every one of them does. And not
right,
every single one of them I have a direct line of communication with the founder because I have invested through syndicates, which is another way of doing it, which is, a group of angels, and there's somebody
right.
else that runs it. And that's on purpose so that they don't have 1,000 people knocking at the founder's door every 5 seconds saying, what's going on with this, or give me free product for that, or whatever. So
Yeah,
I respect those boundaries. And if I have something for the founder, I will go through the syndicate lead to go through to the founder.
yeah.
Uh, but I definitely like to be helpful. And so I'll make intros. I want them to provide updates. The biggest way that you get people to help is to keep them informed of what's going on. And
Mm,
you can do that very easily by doing investor updates. Not everybody does this. My portfolio certainly doesn't, but quarterly updates go so far. And it's
right.
can be very simple things. These are our wins, these are our challenges. Um, this is what you can help with. Thank you to the people that helped us last time. And
Yeah.
I'll tell you, when you put those thank yous in at the bottom and the people will, you put them right below the asks. So people in their head are like, wait a second, I want to get on
Yeah.
that next update and be the one that was helpful. So, but like it's really important that you make those asks and be as specific as possible. And then that way they can know how it
Yeah.
can help you. If you just say, I need intros to stores,
Mm.
that doesn't what kind of
Yeah.
stores, what region, like what do who are you looking
Yeah.
for, like what, so it's got to be very specific. I want to get into boutiques in the Northeast. Does anyone have any contacts,
Yep. Yeah.
whatever it might be. So
Yeah.
it's the more specific you can be with the ask, the better.
Yeah. I feel like that true or false question sort of comes from, I think maybe like this idea that angels are people who just give money and like you get to do whatever you want with it and they're not going to ask any questions and they don't want to bother you at all. They're like fairies who dropped money, you know what I mean,
Yeah.
onto our business and that's it. But I think, we've talked about here on the podcast before, it's like you don't want to just take money for the sake of money. Like what else can you get from this partner in your business? What else do they bring to the table? How can you benefit most as well, right? From an investor relationship. So I love
I
that you're involved.
yeah, I say that all the time. People solve problems. Money does not solve problems. It doesn't. It's it might pay for a solution, but you still need a person there to
Yeah.
introduce you to the solution, whatever it might be. You have to have the people. So I'm so glad you say that. We are not fairies. We are like, I want to know what's going on. Like, I have a vested interest to help you because I want my money back and more. Like, we're aligned. We are not
Yeah.
like, I am there to be a resource, to be a help, to help you push the business forward, to answer questions, whatever it might be. I want you to succeed because that means that I make money.
Yeah.
Bottom line.
I think a lot of founders, and this was me in the early days of my business, it's like, well, I'm in charge. I'm supposed to know all of the answers. I'm supposed to do it all on my own. I don't want to look weak and ask for help. It's like, no, you're not weak if you ask for help. Like it's impossible for you to know, have access to, etc., the things you need to really move your business forward. So network, create real relationships. And like you're saying, put the ask out there. And I love the thank you to the people who've helped you in the last quarter to get you where you are today. It's an impossibility to build a successful business or brand without community of some
Yeah.
kind. Totally
Yeah.
believe in that.
You cannot, yeah, that's 100% true. You can't, I get that. I have that a lot myself too, as a solo person. I I can't do everything myself. Even with AI, I can't do everything myself.
Yeah.
And it's you have to, yeah, you have to know when to ask for help.
Yeah.
So true.
So, okay, this next question is still a true or false, but I think it's going to kick us off into a broader conversation, which I'm really excited about. And you already sort of touched on this with your mention of the safe note, but I'm going to ask it anyway. True or false, angel investors don't want or won't have equity in your business. I think there has been a belief that VCs have equity and angels don't. And this is like a legit belief that is out in the world.
Oh
So I want
God.
you to I want you to clarify that, demystify, if you will, that belief.
Yeah. Okay. Everybody that's an investor in your company will get granted equity at some point. So
Okay.
if you if you think you are raising on a convertible, if you're raising on a convertible note or a safe note, it will convert into equity. A convertible note is the word convert in there is that it's converting to equity. And a safe note is an agreement for future equity. So there are terms in those documents that when you hit those certain points, that's when it converts into equity. And it might be when you raise a certain amount of money and you're valued at a certain amount, or it might be time, which is the convertible note. So that is absolutely and categorically false that angels don't have equity. I have equity in every single one of my companies. Actually,
Yeah.
one company I did invest in a debt and I did a debt deal with them, but that was different. That was it's a totally different thing. So I
Yeah.
only in that situation, I'm only getting paid the interest rate that I'm getting paid back my principal and the interest rate that I received. I don't have, once that's paid off, I don't have any upside in the business. I have no interest, equity interest in the company after that point. But all of the other deals are all equity.
Yeah. So can you talk a little bit more about a safe note? Because I feel like people might have some questions around that. So when there's a safe note and an angel investor invests funds into the business, is the founder, is the company paying you back principal and interest at that point, or no? It's like we're utilizing that money and we know that at some point in the future it will convert to equity, and that's it, kind of plain and simple.
That's right. So it's a it's never unless you strike some sort of other deal, the only way an angel investor, if you start out with a convertible note, a safe note, or it's equity from the beginning, the only way an investor gets paid back is when you exit. And that might be through selling your company, that might be through a merger and acquisition, or it might be through going public. Those are the
Right.
only ways. So there are other deals that can be structured that whereby an investor gets paid back, but it wouldn't be under those instruments. You could do a debt deal. So you do a straightforward, just like you get a loan for your house. So you agree to pay a certain interest rate plus principal and you pay it back over time. So that could be
Right.
a way to do it. That's, generally a loan. There's also revenue-based financing, which means that the loan is paid back based on how much money you make every month. So if you have a great month, you pay a lot back. If you have a bad
Mhm.
month, you don't pay that much. So some founders like it because, like, if you have a straight $10,000 a month you have to pay back, but you have a bad month, you got to come out of pocket for that. So it can be
Yeah.
attractive. But that's a different animal itself too. And there's companies that do that. So,
Yeah.
there's inventory financing, all these different things. But if somebody calling themselves an angel investor is taking equity in the business and expecting to be paid back when there is a liquidity event. And that liquidity event is when they get purchased or go public.
Yeah. So this is a great segue to my next question, which I essentially asked you on our one-on-one call that we had a couple months ago, because I work with a lot of, well, food businesses, so food CPG, as well as farmers, ranchers, fishers. Like we're sort of all over the mission-driven food industry. There is no intention to sell, right? Or if there is an intention to sell, it's not like this like hard and fast thing that we're looking forward to at a specific, time in our life. We aren't looking to be acquired by a Pepsi or something like that. And so one of the questions that came in from one of our listeners was, are small mission driven businesses investable? And I think what they mean by that is, we intend to stay, for example, regional. We don't intend to sell.
Yeah. So yes, but don't go for VCs
Right.
because VCs, venture capital by its definition, is all about growing and scaling at all costs. And it's the only way they get paid off is if you sell or go public. So that's the only way. So they are looking for you to scale as fast as possible, make as much money as you can, and sell for as much money as you can. If you have a small business that you want to pass down to your kids, or you want to, it's a co-op and you want to keep it's with your employees or something like that. You have no intentions of scaling to those huge levels. Yes, there are investors out there that would invest in the business, but you have to figure out how you're going to pay them back. So
Hmm.
that could be a revenue share. It could be a distribution of your profits. It could be a loan, like we talked about. So there's just different ways to do it, but everybody has to be upfront about it. And it would be a different instrument. It would not be a
Yeah.
safe note. It would not be a straight, typical equity deal that you see angels and VCs do. But it's just, and some angels very well might be excited about investing in that kind of company where they actually get distributions quarterly or annually or something like that.
Yeah.
Because as an angel, you're sitting on deals for years before you actually
Right.
see any return. So that might be attractive to some people. It just depends on what their risk appetite is. And you have
Yeah.
to kind of go out and find them or go to them and say, hey, go to angels that are in the space and say, would you ever consider this type of deal? And just
Yeah. So like find folks with the right thesis. And then
yes.
from there, yeah, sort of ask the question,
Yeah.
this is what we're looking to build. Yeah. Is this something you would want to invest in or be interested in and having that discussion?
You
Go
have to
ahead.
know, what are you raising the money for? What is that going to do for you? How is that going to increase your revenue? It has to be tied to a specific return on the investment so that the investor can see, okay, let's say it's a local grocery store that also produces a little bit of their own product, and they want to open up another location and continue to grow the SKUs that they're selling, something like
Mhm.
that.
Yeah,
Okay, great. How much are you investing in new product development? What are the products going to be? Where is the new location? Like, how much more, what's the impact going to be on the business? How much can you grow? And so then you can show them, if we do this, and this is where you come in, Sarah, right? You
yeah,
do all the math on this stuff.
yes,
If you do this, your revenues will go here, and then that will allow you to have this much excess cash flow to pay them back.
exactly. Yeah. I just met with the founder maybe a couple months ago now, and I thought we were getting together to have one conversation. And when we got on the phone, we were actually having a conversation about how do I get funding? And I was like, we're not ready to have the how do I get funding or who I should go to conversation because you don't have any plans for what any money you take in would result in. What is your strategy? Like, what kind of business are you growing, right? Like, down to who is your target audience? Where do they shop? Where are you going to reach them? What is your sales plan, right? Like just dial it in. And I think people get really overwhelmed by how do you pull all those pieces together? And so just a piece of advice here is like, just break it down, like bit by bit, right? Just answer one question at a time. We left a 1 hour session with a sales strategy, and not just a sales strategy, but like, here's what we're going after. I actually sent her away from that conversation with a do a little bit of homework for me, right?
Yeah.
How many, for example, boutique hotels are in your backyard, right? If you're thinking about that as your target audience for now. And then she came back with numbers, and we could take those numbers and literally turn it into a 12-month forecast that made sense. And it was like, okay, now with 2 hours of work, you have something that you can go have a conversation with people about and say, because now and also that guides what the thesis of your investor should be, right? They wouldn't come to you necessarily if you aren't helpful in the boutique hotel area, right? But like someone who has experience there would perhaps be a great fit
Yeah.
as an investor for them. So it's like, I always get very excited about like, do the homework, have the plan. What is it you're trying to build? And not only like, hey, I need money to do this thing, but as you said, what is the outcome of that activity? Because
Yeah.
at the end of the day, that investor wants to get paid back. And also, you should be moving your business forward in a productive way, right? You're not just wanting to grow top line revenue, but like we actually want to make money, have profit, have positive cash flow at the end of the day.
Yeah, and that's a huge thing that I always, every founder that I coach and work with and every founder that I look to invest in, I want to know, what is that point at when you're going to hit profitability? If you're in a product business, how many units do you have to sell? How many markets do you have to be in? What's the gross margin at that point? What is your cost? How are you going to cut down on your cost of goods? Like all of
Yeah.
those things, it's so important to know what that is. And I tell every founder, like, if you don't have a financial model, don't talk to me. Like, it's, you don't know what you're going to do with the money and what the return on every single thing. Well, I just want to pay myself. No, thank
Nope.
you. I'm not doing this. So that is, first of all, that's self-dealing. And second of all,
Mm,
it's not, you aren't doing this so somebody else pays your salary. Like,
yeah.
you're we're all trying to do this to build an asset
Yeah.
to a big return.
Yeah. And Katie, I want to just take a second to like do a little plug for the software that I think by the time this episode is out will have been launched. But in our forecasting tools, you can see how many units do you have to sell in the next 12 months to hit this revenue target. You see the gross profit margin, you see the COGS, you see how much funding is, outside money or additional money it's going to take to get to this plan. So like we've thought all of these things through, right? This is like, I know that people need this information for themselves. They need it if they want and are seeking investment. It's like, and it's tricky to do it on your own if you aren't a nerdy numbers person like I am. So we're really trying to create that. So I was just like, as you were listing off those things, I was like, that's a square, that's a square. I was like picturing the
I love
software,
it.
and what is there. So it's really exciting because we want to help people. And I say this all the time, like every CPG company starts with a like in debt, right? Money does not magically appear in your checking account when you open it as a business. So whether you owe yourself money, the bank money, a credit card money, family and friends money, you owe money to someone or something. And the goal is to pay them back and then some, right? And like that's what we're wanting to achieve. But also, it's impossible to grow a food business without ever needing additional money from somewhere, right? We talk about financial sustainability, positive cash flow, but to say that like you'll be able to keep on growing even at a relatively slow pace without ever having to lean on a credit card or a line of credit or some capital, whether it's from a bank or something else, like that's pretend. Like it's impossible. And
Yeah.
so I think knowing how you want to grow and then all the ways that you can access funds, I think is just critical. It's like so important for founders to know.
Yeah. Yeah. I think like inventory financing is such a big thing. Like there's just, if you go viral, you have to produce product. You're not going to have
Yeah,
the cash to produce product. So like everyone's like, well, I'm just going to go viral. That's like a strategy for a lot of people. I'm just
I
going to
know.
go viral in CPG. Just going to go viral on Instagram. Okay, great. So then when you run out of product, what are you going to do? And your customers are mad and nobody
Yeah,
can get this viral product. So
yeah,
yeah, but and to your other point, I love that you have all the boxes that you're saying, because I always say to people, what are the metrics that mean success for you? Like what
mm,
metrics are you measuring? And then what is success? What are the goals that you're going to achieve? Like what do those numbers look like? What is it, getting your gross margin to 75% from 50%?
yes,
Is it, is it growing your units sold from, like, what is the growth percentage of the units sold? What is the revenue
yeah,
growth number? Like all of those things. Like what are you tracking and what are you achieving?
yeah. And it's like, what are your goals? I'm visualizing now, right? It's like, where are you now? That's like comes from your P&L, right? What does the last 12 months, last quarter looked like? What are your margins there? How many units have you sold, right? You have that information. What
Yeah.
are the goals like you were just talking about? Okay, you literally can build your strategy between those two goalposts, if you will,
Yeah.
right? And it's like when you know you need to sell 10,000 more units, then you can zero in on who will my customers be.
Yeah.
Are they going to be, more stores in my region? Or am I going to go deeper? Am I going to start to go wide? Like it just all can start to take shape there. If you're looking at the margins, it's like, well, what are the margins in each of the channels you grow? And if you're trying to grow that margin, some channels are just going to be a no, right? As far as like where you're going to focus on growth. So I'm vibing with you on
I,
this advice and how it doesn't have to be hard, right?
yeah.
And just looking at where am I now and what do I want to achieve is literally like step 1, 2 to being able to produce a strategy that can then lead to so much more good stuff. So
Yeah. And this is why I tell every founder, they always want to, and you probably see this, they want to hire a fractional CMO or fractional marketing person
yeah,
before a finance person. I always say go with the finance person first, because building the model, they're going to know so much more. They're going to know the key metrics like you just laid out on the
yeah,
marketing side, and why certain things aren't a good idea to go after day one. And
yeah,
they're going to know what ROAS means, even if you don't, return on
yep,
ad spend. So, like when you're saying, oh, I'm just going to advertise everything on Meta, okay, but you have to measure that. Is it working?
mhm,
Like you have to look
yeah,
at that. So,
yeah.
yeah, I always think the first hire should be a fractional CFO who builds you a good model, who then helps you develop the strategy to reach the goals that you want to achieve. Then you can go put it all in practice.
I agree. I think the most successful founders that we talk to on this podcast have all said we had to say no to customers, retailers, people who saw what we were building, were really into it, wanted to work with us, but like the numbers said, we can't afford that. The numbers said we can't get the margin we need right now. We need to be producing at a higher volume or get our packaging costs down, whatever it is, before we can say yes to that customer. They're still in business, they're thriving, they eventually got to the yes.
Yep.
As opposed to the idea of like, I'm going to say yes right now, which I feel like, and I'm not speaking ill of CMOs, but if you have marketing just like driving that bus, it's really easy to drive yourself into a bad financial situation, right? Because you're not necessarily seeing the whole picture. And I'm a huge advocate with all of my, CFO clients. I want to be in all the marketing conversations, not like the ideation necessarily and like the creative, but what's the plan? What are the goals we're trying to reach? If we're trying to hit a revenue goal in this quarter, awesome. But what is the impact going to be on our gross profit margin and our contribution margin if we're running sales, right?
Yep.
I want to be in on those numbers so that we know that we're running profitable deals, or we're going to, how many repeat sales with that customer is it going to take for us to be profitable with that
Yep.
customer? All those things I think are super important. So collaboration is key. But first, I agree with you. Get your finances in order first.
Yeah. I mean, I don't know that, especially in the food space and beverage space, to get on a retail shelf, to get in a major supermarket or a Target or a Walmart, it is unbelievably expensive. It is insane how much, and like how many founders have you worked with who have gotten their first check back from the distributor and it's like $1, and
Oh,
after they thought it was going to be $50,000.
we've had negative checks. We've had you owe money.
Yeah, I'm
Oh,
sure.
yeah. I mean, yeah. And I think too, it's like, it's not just the check that comes back is small. You're also like, there are instances where there's money leaving your checking account, right? Like you're paying up front, like fees, and also the check you're going to get back is going to be really tiny. We did an episode on the first check that founder got back from Katie on like a
Uh-huh.
huge launch, and we're talking five figures, that were invoiced for, and four figures back,
Yeah.
and oh, by the way, it takes 120 days to get it. It's
Yes.
just so wild. It's wild.
Yeah.
Um, I mean, I won't get into my thoughts on how this industry functions in terms of the distribution and the retail and sort of a bit of corruption I think that exists. But if you're choosing to go that path, and I think there's a lot of good purpose to do that, right? To get good product to more consumers, we have to understand the game.
Yeah.
And it's, yeah, so super important, so expensive. One of the things we're building into the software too is a customer profitability calculator, so that you can figure out, is this a profitable relationship, and if it's not, what levers can you pull to make it profitable, maybe by the end of year one, right? Like, can you reduce trade spend here? Do you want to try to negotiate down the free fills or the slotting fees? What are the things that would make this a yes for your business rather than a no?
Yeah.
And if you can't get to yes, then say no, and it's totally okay to wait to grow.
Yeah. Yeah, it is. I mean, that's the thing. It's like people think, "Oh my God, this opportunity is going to be gone forever and I'm never going to have." Trust me, if
Yeah.
you're good enough and big enough, they're going to want you later. And by the way, you'll probably get better terms then too, right?
Yes, I totally agree. Absolutely. Yep. So you sort of answered this question, I think, sprinkled throughout our discussion here, but another listener asked, what leads an angel to, and this is their words, to bet on a CPG founder?
It comes down to the founder at the early
Mm,
stage. So
okay.
this is not necessarily CPG specific, but to me, I look for a founder that has founder market fit, meaning they've got experience in doing what they're going to do. So, for
Okay.
example, I invested in Juliet Wine, which is a premium box wine company. one of the founders has a sales background, like a huge sales background. The other founder worked for Pernod Ricard. Like she worked in
Ah,
the alcohol space. She knows exactly, and PR especially. So it was just that those two co-founders coming together was a perfect fit for me.
right.
They I also look for a lot of passion about solving the problem. So to continue to use that example, they are very into the eco-friendly nature. Wine is extremely expensive to ship because of glass bottles. So you've got
Ah,
these, think of a case of wine. If you're lifting 12 bottles of wine, it's
yeah.
really heavy, and it's
Yeah.
that costs a lot of money to send across the country or wherever it's going. And just the transportation cost alone is intense. So
Yeah.
in doing it in cardboard cylindrical boxes in a bag, and they have they call it the Eco Magnum, that they trademarked the name, but it's two bottles. It's a liter and a
Oh,
half of
nice.
wine. So the equivalent of a case of 12 bottles is six of these boxes, which are I could carry them in two hands because they have strings on them. They have the boxes have handles. It's
Yeah.
like you can carry them around. It's great. So it's like
Yeah.
they're very focused on solving that part of the problem too. And then the other thing is the premium wine. They really are focused on, the boxed wine. We all think of the Franzia, right? That was like the
Yep.
beautiful blush pink color, but they have really elevated it and using quality wine. So they've got their set things that are really important to them, and they do not deviate. They're
Mm,
just so totally focused on those things. So that's great. So that's like the founder market fit, and then
yeah.
the opportunity that they saw in that market, that they're bringing, and in fact, they're actually going through something right now where a huge brand is copying them exactly.
I
And
saw that.
literally, did you see that? They
Yes.
used one of the co-founders' hands in their ad. They used the exact, like they literally photoshopped their product into the over
Wow.
the Juliet thing. Ridiculous. So anyway, so they're doing something right, but it's not okay, but it's
Yeah.
so okay, so I digress. Founder market fit. So whether it's industry experience, passion for the problem, uh,
Hmm.
a solid plan, knowing what you're going to do and how you're going to do it, that's really key as well. And so I think when it comes to CPG specifically, there are some angels out there that just really like certain categories. I have one angel friend that she just loves beauty. She absolutely loves it. So she goes deep on it. She knows every product out there, everything everyone's doing, and she really fits. Even she's she's actually an investor in Juliet, and she doesn't even drink, but she saw the fit there. Um,
Yeah.
and it's so I think finding other angels that are passionate about the problem, finding people that have maybe done it before and can have been there, done that, and can see your innovative idea and how
Yeah.
you execute on it. I CPG is really hard. It's really hard. It's not the sexy thing right now, and I get that. So there's a lot of competition in categories, and it's really execution that's going to win the day, I think.
Yeah. I love that. Something that you talked with Nomke about in the conversation that I where I met you sort of for the first time was that relationship piece with an investor, potential investor. And you said some things that kind of surprised me, but were helpful because when I reached out to you, not looking for investment, but I was just like, hey, I would love to meet you because your world in the cross section of like tech and CPG, it's also where I live. Different people, different positions, but like I feel like we should know each other. And I've really loved following your work and just getting to know you in the few conversations we've had. But I was one of those people who was like, I can't just like reach out to someone and be like, hey, I'm interested in talking with you. You know what I mean? And I did get a warm introduction via Nomke because I know better than to just randomly hop into your inbox. But I thought you gave some really great advice around reaching out or having a connection made and then staying in touch with folks. So can you shine a light on some of your top advice in that department?
Yeah, I do think the warm, if you're looking for investment and you're trying to get to a certain investor, the warm intro is going to win every single time. In 10 years, I have taken one cold DM, LinkedIn DM as a pitch. One. I
Wow.
get pitched, I get pitched probably 50 a week. No joke.
Yeah.
So and most of them don't fit my thesis and aren't
Right.
relevant and whatever. But I do answer every single one, which is very time consuming. Yeah, so the warm intro is really key, and it's about finding that alignment and having a specific ask. I mean, you came with, it does make sense. Like I saw it right away, but you told Nomiki what to say and pointed it out and said, this is why we are aligned, and
Yeah.
showing that very specifically, so I don't have to guess. I don't have to do any work and like look you up, and you're already vetted because Nomiki said you should meet Sarah. But
Yeah.
by you saying, I'm a fractional CFO, I work in CPG, I'm building a tech platform to help with this, like all of those things. Oh yeah, I get it right away. I see why you want to talk. I'm interested in all those things too. We can help each other. So
Yeah.
showing that relationship is great. But it is about building a trusting relationship. When somebody came to me today, some guy in my DMs, um, he had a an automatic referee business, I think it was, like for like sporting events.
Hmm.
And it was a man did not appear to be underrepresented. And it's like in no way is this a fit for me. No way.
Yeah.
And it makes you feel so small and like you're just a check. Like they're just going to
Yeah.
anyone. And I said to him, how does this meet my thesis? Because I try and coach people like that reach out to me in the
Yeah. That's
full
nice of
DMs,
you.
and so that they're like, oh, they can look. And I then he said, I don't know if his response was, I don't know if it does, but I'm reaching out to anyone I can that has investor in there. And so I went back and said, can I give you some advice? And he said, yes. And I said, don't do that. And I
Yeah.
said, go and look at people's thesis and find a warm intro because cold intros don't work, and go that route. Tell people,
Yeah.
don't make it hard for them. Make it easy for somebody to want to connect with you. Give them a reason to do it. Don't make them do work. Don't make them look at your deck. I'm telling you, people, the amount of decks I get sent, I'm never going to look at them. I don't have the time. I literally don't have
Yeah.
the time. Don't send me your deck. Don't send me your website. Don't tell me to do anything. You do the work for me. Make it easy for me to say yes. So thinking about it that way, developing, start a conversation, comment on their LinkedIn DMs
Mm.
um, or Instagram, like show some value. And, I have developed a lot of relationships on LinkedIn. I mean, that's where I
Yeah.
met Numiki, and now we're doing an event together tomorrow, in real life.
Amazing.
Yeah.
Yeah.
So
Yeah.
you can develop real relationships that way.
Amazing. Any like final thoughts or anything you want to say to our CPG founder audience before we sign off for the day?
Keep at it. Don't be, you guys are providing a real service to the world. And just because you're not an AI company doesn't mean you're not valuable, because you are. Like, we need to eat, we need to drink, we need to put clothes on our backs, we need to have products in our house to make us feel better, even if it's
Yeah.
just a candle or dog food or whatever it is. So
Yeah.
you are providing a real service and something that is worthwhile. So keep going, and don't give up.
Well, thank you for that. I totally agree. And Katie, thank you for sharing your insights, laying some good, like foundational information for our listeners as well, and answering questions from the audience. This has been super fun. I could keep going. I'm not going to. but we appreciate you so much. And if folks want to, because you've got some interesting tools on your website too, so I want people to check those out. Where can they kind of learn more and work with you in some ways?
Yeah, so you can DM me on LinkedIn. That's probably the easiest thing to do. I have digital twins that I built that are one is an Ask Me Anything. I call her the advisor. She's sort of that Ask Me Anything. Should I fundraise? What are the basics of fundraising? She's like perfect for that should I fundraise person and what are all
Mm.
these things mean. She can teach you all about a safe note and all that good stuff. And then I have the other one that I call the investor, and she is not so nice. She's a little bit more direct and mean, but she can review a deck if you upload it in a PDF.
Ooh,
Yeah, she'll give you slide by slide feedback. She will help you frame your messaging on things. You can practice. You can say, I have an investor pitch, ask me questions that an investor would. You can give your whole pitch. You can talk to her. Both of them you can talk to or message with. And I will say the investor, she's won like a ton of money for people. Like there's one founder that's won in two pitch competitions, she's won over $50,000.
wow.
Yeah, using her to refine her and that was a makeup product founder, skincare.
Fascinating. That's awesome.
Yep.
Congratulations to you for building something so
I
helpful. That's
know.
awesome.
I know. I'm so excited for her. So that's the intent though. Like I know to talk to me, I'm expensive.
Yeah,
I dumped my entire brain into these tools so that I can be more accessible to people. So that, and then I also help founders with fundraising. So I'll do like a pinch intensive, which is reviewing your deck and materials if you're stuck in fundraising and you don't know what's going wrong, or if you're just starting your journey and you want to develop your pitch and your deck and your whole strategy around it. So yeah.
amazing. Awesome resources for, as you said, tech and CPG founders. Thank you again, Katie. This has been so awesome. I hope you have a great day.
You too. Thank you so much, Sarah.
Wanting to dive deeper into your financial strategy? Visit thegoodfoodcfo.com to learn more about the Good Food CFO software.
This podcast is for entertainment and informational purposes only and is not intended to provide personalized financial, tax, or legal advice. Every business is different, so please consult with qualified professionals about your specific business and financial situation. Any actions you take based on what you hear on this show are at your own risk.